Hello guys, I hope you're doing fine, and I also hope that you already watched the three-part video discussions on adjusting entries. Today we're going to discuss another type of adjusting entry that we must prepare for accrued interest on notes. Supposedly, this is one of the things that we are about to talk if natuloy yung online meetup natin last week. But since I have this 2-day seminar na kailangan kong i-attend, so kinailangan nating ipagpaliban yung online class natin. And then I realized that we need to double time kasi yung final exam ninyo is fast approaching and we need to cover at least the whole accounting cycle. So, kailangan nating mag-save ng time. That's why I decided to prepare this discussion video. And later in this video, we will also be doing some adjusting entries on our continuing illustration, the Davao Laundry Services. At this point, we'll now discuss the adjusting entry for accrued interest on notes. The notes we are referring to here is the promissory note. The promissory note is an unconditional promise in writing made by one person to another, signed by the maker, engaging to pay to order or bearer a sum certain in money on demand or at a fixed determinable future time. I think some of you already had experience of making a promissory note last midterm exam. Kasi some of you medyo gipit, hindi nakapagbayad o kaya kulang yung pambayad na tuition fee. So, ang ginagawa ay gumawa ng promissory note. So, on the part of the student making the promissory note, it is a notes payable, which is a liability. And then on the part of the school, that is a notes receivable, and that is an asset. However, what we are referring to here in this kind of adjusting entry is the interest-bearing notes. So, yung kanina yung sinasabi nating promissory note na ine-execute ng mga students every time na hindi sila makapagbayad ng tuition fee, that is non-interest-bearing. Again, what we're talking here is the interest-bearing notes. The interest on the notes is computed using the formula interest is equals to PRT, or interest is equals to principal times rate times time. And we have here an illustration. Hotel Casablanca borrowed money from Banco de Oro and issued a 100,000 pesos 6% 60 days note dated December 16, 2019. So here in this illustration, Hotel Casablanca is the maker or the borrower or the debtor, and then Banco de Oro is the payee or the creditor. So let us now itemize the given information. So the principal amount of the loan or the borrowed money is 100,000 pesos, and then the interest rate is 6%. So this is an annual interest rate or the interest rate for 1 year. And then the time is 60 days. And then the maturity date is on February 15, 2020. So that is 60 days from December 16, 2019. So we are going to find out how much is the interest and the maturity value. But before going into the computation of the interest and the maturity value, we will have first the journal entry on December 16, 2019 upon the receipt and the release of the note. So, on the book of Casablanca, which is the maker or the borrower, so the debit entry would be cash, 100,000, and then credit to notes payable, 100,000. So, this is the record, the issuance of 100,000 pesos, 6%, 60-day note. And then on the part of the payee, or on the part of the creditor, which is Banco de Oro, the transaction is going to be recorded by debiting the notes receivable, 100,000, and then crediting cash, 100,000. Let us now proceed to the computation of the interest and the maturity value. So let's start with the interest first. So again, the interest is computed by multiplying the principal times the rate and then times the time. So the principal amount of the loan or the borrowed money is 100,000 pesos, and then the interest rate is 6%. So as I mentioned earlier, the 6% is the interest rate for 1 year or the annual interest rate. And then take note that the borrowed amount or the note is for 60 days only. So this means that we need to determine how much is the interest for 60 days, which is the term of the loan. So that's why we have here in the time, we have 60 over 360. So the 60 here refers to the term of the loan, which is 60 days. And then 360 refers to the number of days in a year. So usually in a computation like this, we're using 360 days as the baseline for a year. Pero if merong specification sa problem na kailangan gamitin ay 365 days, then you have to use the 365 days. But here, we're going to use 360 days. So 100,000 times 6% times 60 over 360. So the interest for 60 days is 1,000 pesos. Now for the maturity value. The maturity value is computed by adding the principal amount of the borrowed money and the interest. So the principal amount of the borrowed money is 100,000 and then plus the interest for 60 days, that is 1,000 pesos. So the maturity value is 101,000 pesos. So on February 15, 2020, which is the maturity date, the payment and the receipt of the principal and interest is recorded as follows. So for the Casablanca, which is the maker or the borrower or the debtor, the payment of the principal and interest is recorded by debiting the notes payable at principal amount of 100,000 and then debit the interest expense, which is 1,000 pesos, and then credit to cash 101,000 pesos. On the part of Banco de Oro, the payee or the creditor, the receipt of the principal and interest on the note is recorded by debiting cash 100,000 pesos and then crediting the note the interest income 1,000 pesos. Now let's go back here in our computation. Take note that the term of the loan is 60 days and it will due or it will mature on February 15, 2020. And then the end of the accounting period is on December 31, 2019. So therefore, we have to prepare an adjusting entry on December 31, 2019 for the interest. Meaning to say, we have to determine how much is the interest from December 16, 2019 to December 31, 2019. Let us now compute the interest from December 16, 2019 to December 31, 2019. We already had computed the interest for 60 days and that is 1,000 pesos. Now, we have to compute how much exactly is the interest from December 16 to December 31, 2019. So this is how it is computed. So we have the interest for 60 days, that is 1,000, and then multiplied by the fraction 15 days over 60 days. So the 15 days here is the number of days from December 16 to December 31, 2019. And then the denominator, which is 60 days, this refers to the term of the loan. So 1,000 pesos times 15 days over 60 days, so that is equal to 250 pesos. So this is now the interest from December 16 to December 31, 2019. The interest from December 16 to December 31, 2019 may also be computed in this manner. So we have here the interest for 60 days, which is 1,000 pesos, and then divided by 60 days in order to get the interest per day. And then multiplied it by 15 days or the number of days from December 16 to December 31. And that will give you the same amount of 250 pesos. On the part of Hotel Casablanca, which is the maker or the borrower, the 250 pesos is an interest expense. And then on the part of Banco de Oro, the payee or the creditor, the 250 pesos interest is an interest income. And this is now the adjusting entry on December 31, 2019. For Casablanca Hotel or Hotel Casablanca, which is the maker or the borrower, the interest is recorded by debiting interest expense, 250 pesos, and then credit to accrued interest expense, which is also 250 pesos. You can also use interest payable instead of accrued interest expense. So this is to take up the interest on the note from December 16 to December 31, 2019. For the payee or the creditor, which is Banco de Oro, the interest is recorded as follows. So debit to accrued interest income, 250 pesos. You may also use interest receivable instead of accrued interest income. And then credit to interest income, 250 pesos. We will now proceed to our continuing illustration, which is the Davao Laundry Services. So this will be the application of all the concepts regarding adjusting entries that we have discussed in the previous videos. And we have here the first information that we must consider for adjusting entry. Letter A, 1% of the outstanding receivable account is estimated to be doubtful of collection. So let's now check how much is the outstanding receivable of Davao Laundry Services. So we have here the ledger for accounts receivable or the accounts receivable account. And as you can see, the accounts receivable has an outstanding debit balance of 35,000 pesos. Again, the first information given to us says that 1% of the outstanding receivable account is estimated to be doubtful of collection. So this means to say that 1% of 35,000 is estimated to be doubtful of collection. So the 1% of 35,000 is 350 or 350 pesos. So this is now the uncollectible accounts. So we will now prepare the necessary adjusting entry for this one. So we're going to use the page number 2 of our general journal of Davao Laundry Services. And then we're going to put the date. We have 31. And then for our adjusting entry, we have debit and collectible account at 350. And then credit to estimated and collectible account 350. This is to take up 1% of uncollectible account. Take note that we have this letter A written on the right side beside the adjusting entry. So this is an indication that this is our first adjusting entry. Moving on to the next information, and that is letter B. 20,000 pesos cost of supplies inventory was actually consumed. So this is in relation to the laundry supplies purchased by Davao Laundry Services on March 2, 2019. So again, here in letter B, 20,000 of this laundry supplies that was purchased on March 2, 2019 is actually used, consumed, or in other words, it is already an expense. So here's now the adjusting entry for this one. Debit to laundry supplies expense, 20,000 pesos. And then in order to reduce the laundry supplies balance, we credited laundry supplies by 20,000. So this is to take up the cost of supplies actually used. And then we put also letter B to indicate that this is the second adjusting entry. We will now proceed to letter C. The laundry machine has an estimated life of 5 years without salvage value. So here we need to compute for the depreciation. So the cost of the machine is 150,000 pesos. So we need to compute first the annual depreciation. And since there is no salvage value, the formula that we're going to use is this one. Cost of asset divided by estimated life in years. So we have the cost of the asset, which is 150,000 divided by the 5 years estimated useful life. So that is equal to 30,000 pesos. So this is the annual depreciation expense, 30,000 pesos. Now we will compute how much is the depreciation expense in every month. So we have here 30,000 annual depreciation expense divided by 12 months. So the monthly depreciation expense is 2,500 pesos. And here's now the adjusting entry for the depreciation on March 31, 2019. Debit depreciation expense 2,500 pesos, and then credit to accumulated depreciation laundry equipment 2,500 pesos. This is to take up depreciation expense for the month. Let's move on to letter D. Advertising expense has been incurred already but still unpaid, 3,000 pesos. So this is an accrued expense, an expense that is already incurred but not yet paid. So here's the adjusting entry for this. Debit advertising expense, 3,000 pesos, and then credit to the liability account, which is accrued advertising expense, 3,000 pesos. So this is to take up accrued advertising. And then we also put letter D to indicate that this is the fourth adjusting entry. Okay, so we are now done with the adjusting entries, and the next thing that we're going to do is to post these adjusting entries to the general ledger.